Hi, this is Pat Walker at Mission Winners. Looking at the open, high, low, close combined with volume and comparing action to recent previous price bars. If you can do that, and you can, you will be light years ahead of the competition. Most people are like, God, I don't know where to start with all this. I'm going to share some concepts that work, that have worked for 30 years for me, all right? So let's just take a look, and we'll go through and remember this. This is the key point of this video. Please don't think, oh, it's a red bar, it's a bad bar. Not necessarily. At the same time, please do not think, oh, it's a green bar, it must be a good bar. Not necessarily. So I'm going to go through and show you some examples. We'll grab this bar right here, okay? I mean, we can do the easy ones. This red bar here, I'll slide it. This red bar here, it gaps up. Note the open. See the little hash mark to the left? Note the close. Always combine price and volume action together to make better decisions. We'll just do the simple one. Gaps up, see where this is where it closed the day before, gaps up and drops down and closes down on the day on a pickup in volume. That's a bad bar. That's a bad bar. Now, is that a bar that says, oh gosh, I need to sell everything? No, if you bought right, down lower, like on this igniting bar here, you're fine. But if you chase up here, you have a problem. So, what's a moral right now? Focus on open, high, low, close, and focus on price action in relation to previous bars. Closing above the 8-day. Now, look at this bar. It gaps down. See, here's the close on this day. You see it? Here's the close on this day. It gaps down and drops and closes on heavier volume the day before, down to the 21-day. That's a bad bar, okay? What's it tell you? Hey, don't buy. So now you look at this bar, and I'm going to do something for you. We're going to make this bigger. This bar right here, it opened right there. You can't see it because of the 21 EMA. It opens, it gaps down, and then it drops, and it closes. And you can say, that's a great bar. It closed above the previous day's close. Look at the close on this bar and look at the close on this bar. They're basically about the same. Now this closed above, okay? It closed above the 21 EMA, but it closed unchanged from the day before, basically. There's nothing powerful with this bar except the volume, good tail bar. But it is a wide range bar. Wide range bars can be riskier, all right? It didn't close that strong. I mean, basically, folks, this bar, the stock closed at 120.96. On this bar, it closed at 120.88. It closed up 8 cents. It's not that powerful in the context of these bars. And the next day, it gaps down, closes down. You can say, well, look at this green bar, Pat. It gaps up and closes up. It's green. It's great. Context. It stopped at the 21 EMA. It basically gapped up and closed where it opened, okay? And what other variable do you combine? Volume. Volume's not that heavy. The next day, it gaps up and drops down again on a slight pickup in volume. Now, let's really get good with this. This bar right here, it's a green bar. Look, must be great. Green. Note the open price. It gaps up. Here's the close the day before. It gaps up and closes in the bottom half of its range on a pickup in volume. And it only closed up a little bit. On this bar, it closed at 115.54. Now you can say, hey, how the heck are you getting that? Please note the C right here. See the C? That's the closing price. I'll put it on that bar. You see where it says 115.54? The previous bar closed at 115.36. So it didn't close that strong. And it closed in the bottom half of its range. The range on this bar closed in the bottom on a slight pickup in volume. It's not that powerful of a bar. And what happens? It falls. It drops down. Combine price and volume action. Look at this bar. Here's a good bar, right? Lifting off. And this is a great lesson. Please do not ever get in the mindset that, oh, this is a good igniting bar. Everything's great. It's going to work, and it works every time. Nothing works every time. Remember that. Run it like a business. Control risk. The next day, it gaps up and then drops down. What catches your eye on this bar? Look at the volume pickup. That was serious selling. Heavier volume than the up volume. And then the thing meanders down. There's an example for you. I'm going to do another one here. And again, here's the principle. Combine open, high, low, close, and combine it with volume action of that bar versus previous bars. And you will be, as I stated, light years ahead of other people. Case in point, I'm pointing it again. This bar right here, it's a green bar on good volume. It gapped up and closed in the bottom half of its range. It's not that powerful of a bar. Mantra for you. When you buy, when you're looking at the chart, try to find stocks that price is closing in the top half of its range. That indicates strength. That will help you. And as I pointed out, he's like, well, this is a good igniting bar. I stress, nothing works every time. Next day it gaps up, drops and closes down on the day on a pickup in volume. But now, let's suppose you bought here. There's a moral here too. Be careful buying gap ups, big gap ups. And don't chase price. You follow through with this bar, that is a bad bar. What would it tell you to do? Maybe sell some off. I want to point this out. I'm going to do another one though, and I think this is a good example. Tesla. Is this a good bar? Yeah. Look, it gaps up, closes near the highs, okay, on a pickup in volume. If you're going to buy, try to buy at the right price. Don't chase price. Here's a clean and simple downward sloping trend line. You see this bar? You can say, that's one ugly bar, Pat. I'm going to do something for you here. Watch this. There it is. There ain't nothing there. Closes down on a slight pickup in volume. But there's a clean and simple down trend line here. And it is a max list stock. It is a franchise name. Advance it one day. Oh, look, it gaps up on a pickup in volume, a good pickup in volume. Do you buy here? No, you buy pushing through the line. Buy near proper prices. Don't wait and buy the close. Buy pushing through that downward sloping trend line. It continues up. And it continues up. But note this bar. It gapped up and it closed below where it opened. Note the decreasing volume. Okay? Is that reason enough to say, oh, I'm selling it all? No. But it is a slight warning. And now you get the follow through. You hang on. They hang on. We're going to march forward here. All right? It breaks through. And I have to show you this. Okay, this is important. It pushes above these tops. Hold on. I'm going to get this precise for you. This is important. I'll do it justice for you. Pushes through the tops on a pickup in volume. That's good, right? Yeah. Volume picked up. It wasn't extremely robust. It didn't even do average daily volume, but it did pick up. And what happens? It comes right back into the base. This is a green bar on a heavier volume. Now you know something many people don't. This bar right here. Oh, it's a green bar, up volume. It's great. Note the open. See where it opened? Right there. That hash line to the left. Look at where it closed. What does that tell us? It was met with sellers. It was met with sellers. Constantly focus, refine your chart reading skills. Is this hard? Heck no. All you're doing is looking at open, high, low, close, volume action combined with previous bars. That's all. It's not rocket science. No way. You get to the point where you train your eyes and mind and you can go through the charts and pick up strength and pick up note weakness. And what does it do for you? It helps you make better decisions, better investing decisions. And I love that. Let's see if we can find another one here. We'll just go to the write-ups. I'll just do this one. Okay, here we go. Adobe picks up, lifts across these tops. Here it is. Gaps up, falls, closes up on a pickup in volume. Okay. The next day, gaps up, runs up, closes just a little bit below the bottom half of its range on a decrease in volume. Next day, basically opens unchanged and drops right back down to your pivot price. Remember I said 2 minutes ago, don't let a good gain turn into a loss? You start getting action like this, maybe sell some off. Why? Because it's not doing what it's supposed to do. I mean, if you bought this right here, we'll say at 503, and that sucker runs up to near 520, you're up almost 17 points, 16 points. Don't let that turn into a problem. And it follows right back down. This bar here, this is a great lesson, okay? I didn't notice this till just now. Look at this bar. Oh, it's a green bar. It's great on increasing volume. This is a good bar. Note the open on this bar. And I'm going to do something here for you. Watch this. We'll make it bigger. The joys of modern technology. See the open? That's where it opened, that little hash mark to the left. And it runs up. And what does it do, folks? It closes below where it opens. What does that tell you? It's simple. It was met with selling pressure. Sellers on a pickup in volume. I'm going to pause here and share something. The next day, what does it do? As I said, gaps up here. The next day it gaps up. Look at that. Oh, it's great. Let's buy it again. Be careful buying at the open unless it's breaking out of a long base, okay? Just give you a heads up. This right here, you're not going to see this chart pattern in many books saying, oh, this is the kind of stuff you want to look for to buy. Just tell you that, all right? It does this and drops right back down. No power on these bars. You can say, wait, you're lying, Pat. It's a green bar. It gaps down and it closes up on the day. How did it close? Did it close in the top half of its range? No. How is the volume? Volume on this bar right here, 1.37 million. Volume on this bar, 1.5 million. Volume was a little bit heavier, but not that powerful of a close. And folks, did it take out the previous day's bar? No, it didn't have enough power to even take out the previous day's bar. Now, does that mean, sell it, avoid it? No, just there's no power in it yet. It does tell you this, don't buy any. And the next bar gaps up and then drops down. And note the volume. A lot of people, like, gosh, I don't know, I don't get it. That's why I made this video, is combining open, high, low, close. Also, I think it's very important, and this is what I do, this is what we do at Mission Winners. I'm not just going to constantly show pictures of winners, all right? It's important to show pictures of stocks that didn't work. Why? Because it makes you a better investor. You understand the concept and can apply it to your stocks and make better decisions. We're risk managers, and we watch the charts to control risk. This will help you. Look at each price and volume bar. Look at the open, high, low, close on each bar, and also look at those data points, open, high, low, close, and volume, in relation to previous bars. And you will be able to see strength and or weakness that can guide you and help you make better investing decisions. I hope this helps you. This is what we do at Mission Winners. Give ideas, but also teach, coach, educate, and help people manage them.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.